Gold does not feed you, it does not pay yield, it does not move trucks, heat homes, or power factories, and yet the most powerful systems in the world still hold it like insurance. The United States holds thousands of tons of gold, the IMF holds thousands more, and central banks kept adding to their gold reserves even in the modern age. So here is the real question. If gold is no longer everyday money, why do the strongest systems in the world still refuse to let go of it? Why does gold come back to life whenever people begin to fear money? And maybe most importantly, who actually benefits when that happens? Because the story of gold is not really the story of a beautiful metal. It is the story of trust, fear, power, and very large winners. Very large. In this video, we are going to answer three things. First, how a metal with very little everyday usefulness became one of the most powerful forms of money in history. Second, why gold tends to surge at exactly the moments when trust in the system starts to break. And third, who wins from gold today? The countries that hold it, the countries that mine it, or the players who use it as protection when the world becomes less stable. Because gold is not just a metal from the past. It is one of the last assets that clearly reveals where confidence ends and fear begins. If you look at it pragmatically, gold was a strange candidate for money. You cannot eat it. It gives no energy. For most of history, it was not the most practically useful thing in daily life. If humanity had chosen money based only on usefulness, gold probably would not have won. Grain made more sense, salt made more sense, livestock made more sense, fuel made more sense. And that is exactly why the story is so interesting. Gold became powerful not because it was the most useful thing, it became powerful because money is not chosen by usefulness alone. The strongest money is not the most useful thing. It is the thing people can trust most as a carrier of value, and once you see that, gold begins to make much more sense. Humanity did not discover ideal money all at once. Some of the earliest precious metal coinage appeared in Lydia, and the important breakthrough was not only the metal itself, but the fact that value became standardized in a recognizable form. That matters, because people were not simply trusting random metal. They were trusting metal brought into a known standard, something measured, shaped, and made legible. This is the real leap. Money is not just material. Money is material wrapped inside a trusted standard. Once that happened, gold stopped being only a precious substance. It started becoming organized trust. Gold matched the trust problem unusually well. It was scarce, it was durable, it was recognizable, it was portable, it could be divided, and most importantly, it was hard to dilute suddenly and hard to create at will. That last point matters more than it seems. The strongest money is not the thing people like most, it is the thing people fear being cheated on the least. Gold gave people that feeling. You could not simply print more of it, you could not easily rot it, spoil it, or quietly flood the world with it overnight. That is why gold worked, not just as a commodity, but as a promise that looked stronger than most other promises. But physical properties were only the beginning. At first, people trusted gold because of what it was, then they trusted it even more because powerful institutions already trusted it. Temples stored it, rulers displayed it, empires minted it, trade networks accepted it. Gold stopped being just metal. It became a signal of authority, legitimacy, and lasting value. And that is how trust compounds. First, gold earned trust because of its properties. Then it earned even more trust because the most powerful systems in the world had already chosen it. Ordinary money is usually strongest inside a specific political system. You trust the note or coin because a state, a law, a tax system, and a set of institutions stand behind it. Gold became especially powerful where one government's authority was no longer enough. Across borders, across empires, across trade routes, across political uncertainty, that is one of the deepest reasons gold mattered. Ordinary money depended heavily on trust in a government. Gold could still travel where that trust could not, and once something can hold value between worlds, its monetary power becomes much bigger. This is where the story becomes modern again. Gold matters not only because it became money once, it matters because it tends to return whenever the system starts to frighten people. In 1971, the dollar's convertibility into gold was ended. That was not just a policy change, it was a fracture in the old monetary architecture. In 1980, gold surged to a historic peak as inflation, expensive oil, revolution, and geopolitical fear hit at the same time. Then in 1999, gold fell to humiliating lows. Why? Because faith in the fiat world looked stronger, inflation looked less dangerous, and gold suddenly felt old-fashioned. That is a very important lesson. Gold does not rise all the time. It becomes powerful when fear becomes stronger than comfort. Then the pattern returns. The financial crisis of 2008, the sovereign stress of 2011, the pandemic shock of 2020, and the new surge of 2024 and 2025, when geopolitics, fragmentation, fiscal anxiety, and reserve demand pushed gold back into the center of the conversation. Gold is not just a metal, it is a fear detector. When the system looks stable, gold can feel boring. When trust starts to crack, gold suddenly becomes modern again. If gold really belongs to the past, why do the most powerful systems in the world still hold it in such large amounts? The biggest official holder is the United States, then come Germany, Italy, France, Russia, and China. And the IMF itself remains one of the world's major official gold holders. That is a deeply inconvenient fact for any simple story claiming gold no longer matters. Because if gold were truly irrelevant, it would have been dumped long ago. Instead, it remains inside the system, not as everyday money, but as a final layer of official confidence, not for daily transactions, not instead of currency, but as insurance when ordinary trust stops feeling quite strong enough. Now the map becomes even more interesting. The countries that hold the most gold are not exactly the same as the countries that mine the most gold. The biggest producers today include China, Russia, Australia, Canada, and the United States. That gives us two different kinds of power, reserve power and mine power. They overlap, but they are not the same thing. So who wins when gold rises? Countries with large official reserves win because the market value of their monetary insurance rises. Mining countries and mining companies win because a higher price turns into revenue, margins, exports, and fiscal strength. And strategic buyers win because gold gives them one more way to reduce dependence on currencies, debt markets, and systems they trust less than before. That is why gold is not just an asset class. It is where reserve power, resource power, and systemic fear meet. There is one more reason gold never fully disappeared. Modern paper money borrowed trust from it before it ever replaced it. Early notes, receipts, and promises did not begin by creating trust from nothing. They leaned on trust that was already there. That matters because even after the world moved away from gold as everyday money, the memory of gold as reliable value never fully vanished. That memory still lives inside the system. Gold survives not only as a reserve asset, it survives as monetary memory. So, why did gold become the last anchor of trust? Not because it was the most useful thing, and not because humanity accidentally fell in love with a shiny metal. It became powerful because it solved one of the hardest problems in economic history. How do you preserve trust in value across time, distance, political change, and fear? Gold could survive governments, survive currencies, survive promises, and every time people began doubting the rest, it returned to the conversation. That is why the story of gold is not really the story of metal. It is the story of what people reach for when they stop fully trusting everything else. And if gold was such a powerful anchor of trust, then the next question becomes unavoidable. How did humanity ever decide to replace it with paper, banks, and promises? That is where we go next.